Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
New York coffee. You can easily see from the action over September and October last year that the high at 429.5 from February 2025 continues to cap the longer term rises in this market since the start of 2025. On the downside, the combination of the key 50% Fibonacci line for the important November 24 to February 25 move at 335.15 plus the bright red neckline, which is currently at 348.40, had eroded the bearish pressure until some attempts lower, such that prices after changeover in late December last year did not even make it down to test the next supports, and that's of the bright green October 23 to date uptrend, which is currently at 317.45, nor the 50% Fibonacci line of the May 24 to February 25 move at 310.80, or even the potentially and gradually becoming more important dark blue lower tine, currently at 307.80. All in all, prices turned higher before testing these, filling in the changeover gap from December last year. On the top side, what had been in autumn 2025 a seeming base on top of the gold long moving average, currently at 352.10, well, that is now acting as a resistance on a closing basis, along with a dark blue middle tine. That's currently at 351.40, and that's of the mid-September to late October 2025 bearish shift pitchfork. All these earlier actions higher left us with a number of interesting situations. There is something else I'd once again like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 42 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It's a multi-year, 2012 to 2024, very large reverse head and shoulders bottom for bright red neckline on my chart, currently at 277.25. The break higher over this neckline reached its primary target on the upside, but there was a secondary, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433.75. And that's quite close in the scheme of things. Prices did indeed turn lower up at this key combination of the 100% projected Fibonacci line and the target at 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August last year, the market started to form a base on top of the bright red neckline, a horn bottom if you will. August 2025, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in early September 2025, but not reaching quite as high as we saw back in February last year, before dropping lower and setting up September 2025 as a monthly bearish harami. However, since then, prices have not carried on too much lower. We now have congestion overhead between 317.25 and 375.75. Also quite steep action, especially for a bearish shift pitchfork, for the October 23 to August 25 bullish shift pitchfork, and the lower time below currently at 306.45. I said 9 weeks ago, and I don't favour this pattern. I said that I don't favour this pattern much, but it is nevertheless still there as a pattern. Meanwhile, on the downside, well, the real key will be the bright red neckline below. Now I should point out one more final feature to this daily on this longer term chart, a monthly chart. The possibility that we may even now form either a very large bullish halfway hesitation or a possible bearish double top, for all the contrary implications both these patterns may have. I will not discuss this last point any further at this time, as it's way too early to isolate which may be which. But in all this, I ask you, please remember these here are monthly charts, are longer term charts, in some cases very long term charts. And I cover them more fully in my longer term coffee technical analysis video published 3 weeks ago. London coffee. 36 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press down, heightening the breaks lower. The reactionary rise seen since early August pushed up through some significant resistances. These turned into supports, and some very keen ones. Notably the trio below of the interesting 50% Fibonacci lines for the November 21 to February 25 move at 38.08, which is still support for now. The May 21 to February 25 move at 36.49, which held up the market in late December last year, and the March 20 to February 25 move at 34.81, which so far, well, it's not been tested since early August last year. We now also have, because of the market's moves higher, the congestion support just below the 61.8% Fibonacci lines at 41.68 and 41.87, though not yet the one at 42.90, which is still resistance. Then there is all the moving averages, and they've moved up late last week, up through the green short medium moving average, currently at 41.32. But that now has overhead the dipping slowly gold long moving average, currently coming down at 42.60, and the mauve medium moving average, currently at 42.79. These two are the precursors to what seems to be the main overhead resistance. The dark blue February 25 to date downtrend, currently at 43.26. This downtrend has enough of an impact for me to draw a parallel bear channel line based around it. The lower bear channel line currently at 35.19. And this dark blue downtrend can be finessed a little higher. It's currently at 43.50, and the lower bear trend line can be finessed a little lower, currently at 34.85. I haven't highlighted this bear channel as yet, but the more I look at it, the more I'm thinking I really should start looking into that carefully, maybe next time.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.